In this video, I'm going to talk about the 3 biggest financial mistakes that I've made over the last 10 years and what I've learned from them, so hopefully it can help you. And some of these have definitely caused a few grey hairs on my head. If you're new to this channel, I'm Matt. I've been a finance consultant for over 10 years. I've worked for one of the top consulting companies in London. I now run my own company, and on this channel I talk all things personal finance. So let's get straight into the video. The first topic is this idea of getting rich quick. There is so much on social media about how you can make money and how you can get rich. I tried a variety of things that I saw other people doing. One of them, for example, was Forex investing, which is where you trade based on the price movements of one currency against another. I saw all these people on social media becoming millionaires literally overnight, and I thought, I want to do that. How hard can it be? But the reality is you go into these things without being educated on how to do it. And although I made some money, I also lost money. The times I made money was largely me being lucky rather than coming from a sound, educated investment strategy. There are 2 things which I think are important here. The first is about having a long-term mindset for investing. I think you're much more likely to successfully grow your wealth and money if you go in with a view of making money over the long term, in 3 years, 5 years, 10 years, or even longer. And that's because you de-risk the ups and downs in markets, and because the rule of compounding is so powerful with time. For example, if you were able to invest £500 per month from the age of 25, you would have over £1 million of investments by 60. That's based on the average rate of return of 8% that we've seen over the last 30 years on the S&P 500. Warren Buffett, one of the greatest investors with a net worth of over $140 billion, famously said, "My favourite investment holding period is forever, and to build true wealth, you need a long-term mindset for investing." There's no right or wrong in terms of what to invest in, but I approach it with a long-term view, and I always spend some time researching, speaking to a financial advisor, and understanding any investment before I make it. This has been a much more successful strategy for me. The second part of this is about taking the time to build your knowledge and skills now to increase your earning potential for the future. Alex Hormozi, a self-made multi-millionaire, talks about this, and one of the things he says is that you'll get a significantly higher return from investing in your ability to make money than by doing a short-term investment on the financial market, for example. And what he means by this is that by incrementally increasing your skill set, your income earning potential goes up. For example, if you're currently working as a waiter in a restaurant and you manage to save up £500 and you go and spend that money on a sales course, which enables you to get a higher paying job, if you're then able to add the ability to do marketing on top, you can now run your own ad campaigns, you can get sales leads in, and you can close sales. Your earning potential has just gone up tenfold compared to the pay you were getting as a waiter. But if you used that same £500 and invested it, instead of spending it on education, you would only likely get a few percentage points return, i.e. £30 or £40 over the year. So invest in yourself to increase your skills, your earning potential, and therefore your ability to save more money faster, and then use that money to invest with a long-term mindset. This is a far more sustainable way to grow your wealth. So the second financial mistake I made was not knowing my market worth and the value of my time. And I mean that in a few ways. The first is that the reality is your employer will try to pay you the minimum they can, and this can often be below inflation. So that means you're actually making less money the next year in real terms. In my early years as a financial consultant, I wasn't really clued up on what other people were earning in a similar industry or at a similar skill level, so I never had any leverage to be able to negotiate my pay. It's really important to understand your market value and arm yourself with that information before you go into any pay discussions with your employer. There are lots of tools out there which can help you do research, such as websites like Glassdoor, or you can look at job adverts on platforms such as LinkedIn. These will give you indicative pay ranges for the type of work that you do. I think probably the best way is to connect with a recruiter to understand opportunities to move to a similar job at another company and what the pay will be like. The key is to get robust data which is comparable to the job that you have or that you're going for. For example, it's for jobs based in the same location, in the same industry, and for the same job grade. By doing this and arming myself with the right information, it's one of the things that's helped me to double my income over the last 12 months. I think if you can get in the habit of periodically doing this, it will put you in a much stronger position to be able to negotiate your pay and get your true market value. The second part is about the value of your time and the opportunity cost. When I was renovating my property, I used to spend hours in an evening trying to find the thing I wanted to buy for the lowest possible cost. But on reflection, if I'd used some of that time to continue to build my business and income streams and increase my earnings, and if I had spent that extra 20 or 30 pounds, I would have been in a much better financial position than using those wasted hours to try and save a few pounds. I'm not saying don't look after your spending, and this is not about lifestyle inflation. I'm a big advocate for tracking your expenses each month so you can live within your means. But the key thing here is to assess your time versus the money benefit, and to look at whether there are better ways to use your time to make more money. If you haven't read the book The 4-Hour Workweek by Timothy Ferriss, I'd definitely recommend giving it a read. One of the concepts in the book is about absolute income versus relative income. So your salary could be higher in total per year than another person, but if they work less hours than you, when you look at the hourly rate, it could be that they earn more per hour than you do, and they can use that extra time to also generate other income. It's worth reflecting on this, and there could be subtle adjustments that you can make to increase your return and income in exchange for your time. For example, if it cost you £30 to £40 every few weeks for a cleaner, and in return you got back a few hours which enabled you to work on a side business, and you could earn £150 for that same time, surely it would make financial sense to do this. The third financial mistake I made is focusing too much on saving, thinking it would make me well off and financially free. Now this might sound strange, but rather than focusing solely on savings, you also need to focus on increasing your earning potential, investing and growing wealth. It's very hard to save your way to be a millionaire. If you look at some of the wealthiest people in the world, people like Elon Musk, Warren Buffett, Bill Gates, their wealth is not based on having cash in the bank. It's based on the value of the assets they own. They've acquired assets such as businesses or property, and their wealth grows with the increasing equity value and also from the assets generating income. The income they then receive is reinvested in buying more assets, and that cycle keeps compounding, growing the size and value of their assets and wealth, and generating larger and larger amounts of income in parallel. I get that there is a balance, and you definitely still need to have a savings buffer to cover any financial emergencies like periods of unemployment. And I also get it can be really hard to save that initial money to even be able to make investments in assets. But the trap is, by only focusing on savings and putting your money in low return bank accounts, you'll struggle to ever really feel like you have financial freedom. Once I built a savings buffer which covered over 3 months of my living expenses, I then put my disposable income each month into my pension, my investment accounts and towards buying property. So I've covered in this video my 3 biggest financial mistakes and how the learnings from them have helped me to transform my financial position. I hope some of the points in this video can help you too. Feel free to add any questions in the comments and give the video a like and a subscribe, and I'll see you on the next video.